we've seen the beginning of the bubble. The 2022, NASDAQ down 38%. Now that was important because I've studied bubbles throughout history. They start with a first crash of at least 28% and normally as high as 50. So 38 was right in that sweet spot.
Wait.
That's the first wave down. It at least confirms that the bubble momentum is finally ended. Now, what do? They do and stimulate and they can everybody, oh, the government will save it. Well, we bounce back and oh, the S&P makes a new high and the NASDAQ 100, but not the NASDAQ, not the Russell 2000 small cap. That's called a major divergence, which means we're likely to go back down and then the next wave will prove that we're in a crash and not a correction. And I say that will end up like 80-some% down S&P and 90-some% on the NASDAQ. That sounds like a lot, but if you look, every bubble in history has burst on that range. 29 to 32 is 89% of the Dow. The Dow's like the NASDAQ now. It's like tech stocks. When there's a downturn, the smaller companies always feel it. They always go down more at first and more in the end. The large caps go down slower at first and then catch up with the small caps. They all end up down nearly the same, but the small caps go first. So again, the small caps are down even recently. Okay, we've had this bounce. Small caps already down 7-8%. Bitcoin's down 20%. I've told all my subscribers over and over, Bitcoin's the leading indicator here. That's what you watch. If Bitcoin's crashing now again, stocks will follow usually in about 2 weeks, which is about now. I had a newsletter subscriber say, oh my gosh, Harry, you're saying Bitcoin's going to peak here at 48 and pull back and go lower? He says, it's going to go to the moon. No, that was confirmation to me that I was right. The market always is leading things and then it also turns around. I mean, so Bitcoin crashed from 69,000 to 16, okay? And people would say, well, that's enough. No, I'm comparing it to the Amazon and .com crash in 2000 to 2022. That's the only bubble that's similar. And that means it's got to go down 95 to 96% for a real bubble like this to burst. And the only good news is we won't have any bubbles after this. This will end the bubbles. We've had two now. There's never been two tech bubbles in a row. Bubbles only come, there's these 45-year technology cycles, okay? They only come every other one about 90 years. So you go back, 29, super bubble top. You go back before that, 1836 crashed into 1842. 42 low and the 32 low were 90 years apart, and this 2022 low. So that's a 90-year cycle. That's the only time you see bubbles. Bubbles aren't normal. They're only when things are so good, so long that people just go, well, we've died and gone to heaven. But once it crashes that bad, 29 to 32 was an 89% crash, okay? And that's in the Dow. And I'm saying right in between, S&P 86%-ish, NASDAQ 92, you average those two, that'll be like 89%. When it crashes that much, then people are so bared up that there's no way you're going to have a bubble for a long. People are going to remember that bubble and crash for decades. And one of my slogans is real estate will never be the same. Normally real estate doesn't bubble, but this low interest rate, easy mortgage era, and then China coming along, the government just pretty much told developers, build the stuff and we'll just keep it going. We won't let it fall for long. Well, now it's crashing there, and they're the lead bubble there. So the whole real estate bubble peaked globally and has a lot of momentum down. And now the US is following for the second time. The second time around, people are going to get even more bearish because people have been told and feel real estate's the one thing that can never go down that much because they ain't making no more of it. Baloney. Anything can bubble. Stocks will always go down more than real estate. But for real estate, 34% was more than it went in the Great Depression. That was 26. Real estate doesn't bubble as much as stock or crash as much, but this time it went more and it crashed more. But stock, this bubble burst would be comparable to 1929 to 32, and that's why I'm expecting 80% plus. Deflation won't last long because we're in a longer term mild inflationary era. That's been the whole last century. But 32, we got depression. 32 to 33, and the whole 30s was, I think this will be deflationary for the next couple of years and then not. But the other thing is though, we will not see inflation again. We're not going to see inflation come back and go to 9 or 10 or 20% again. So? This will wipe it out for good. There. Printing money is temporary, okay? That's not the major cause of inflation. The biggest inflation in history was 68 to 1980. That was one thing and one thing only. They didn't even print money back then, and they only ran minor deficits, okay? It was the baby boomers entering the workforce at great cumulative expense before they started to become productive and pay off that thing. So it was totally different. Workforce growth is the one and only thing that correlates with inflation, and that was the highest workforce growth in history.
Wow.
We will never see that repeat. We're older now, more mature, growing slower, having less and less babies. We'll never see the 70s again.
I mean,
well, the other thing, everything comes from births and immigration, which I can add immigrants into the birth index. It's a little more complicated, but I can do it accurately, okay?
Yeah.
The birth index will tell you when you're gonna have inflation not entering the workforce, when you're gonna have the greatest booms, 46-year peak in spending, and now it's 47, and maybe one day it'll be 48, but that doesn't change that much. And when you'll see kind of deflationary as these people exit and retire. That's deflation. So young people are inflationary, middle age are productive as hell, and old people are deflationary, and then they die. That's the ultimate deflation is dying. They already overreacted. You know what their mistake was? They were getting by with this. We just keep stimulating more. They did that since 2009, 13 years straight escalating stuff, but they did it just enough that they could get away with it. COVID happened, bam! They over panicked. This was a predictable 2-year influenza-like crisis. Why? And it's a natural one. Why not let the economy take a break, okay? Because it needed to anyway. Nobody would have blamed them for it. Nope, they had to stimulate harder than ever, and they blew inflation to 9% overnight, and then they had to slam on the brakes, and that's why we've got this. So after that, they've tightened so much, they can't just turn around and say, oh, oops, we were wrong to overstimulate, now we're wrong to over-tighten, and now we're just going to overstimulate again. They're going to look like even worse fools than they already are. First of all, they've already blown it. And I've been predicting the Fed will overdo this like a teenager steering on the road, learning and going off the road. And that's what they've done twice now. Overstimulate, over-tighten.
Yeah.
And they are not going to have credibility after this. And that's a good thing. They shouldn't be telling what the economy should be doing. Yeah. They should be responding to the economy. If the economy needs a little more liquidity because of a war or a crisis or something, that's what they were invented to do. Not tell the economy that you have to grow every year, and if you don't, we're going to just grow for you. That's the most arrogant thing in history for a bunch of academic. Find me one guy in the Fed that's ever run a business. Academic people with PhDs deciding whether the economy should grow or not. That is a crime. So when you see the real deflationary crash, which is what I think is coming in 2024, and it's just a crash, okay, that's when gold goes down. Because gold is saying, if they keep printing more money, we're getting inflation. And that's what Peter Schiff preaches. Right. And that's right. But once it turns down and goes to recession, you go quickly to deflation, and that does not favor gold. That favors cash and something much, much more, treasury bond. The longer the duration, 10 is good, 30 is great. So you're locking in higher rates at the top of a mildly inflationary boom before you go into deflationary crack, and those rates fall. And so the longer that 30-year bond, I'm telling you, a 30-year treasury bond could double or more in the next year or two. You'll never see any investment do that. So that's the deflationary crisis head. If we were going to have a runaway inflation like Germany in 23, that's when you buy gold. If you had to do one thing and one thing only, I'd be in 30-year treasury bonds now, and then after this crash and things start to settle down, then I would go into Bitcoin, only because it's the leading risk assets. I could also buy tech stocks, and other things. Now, real estate, I have a phrase, real estate will never be the same. Because this is the second bubble of something that rarely bubbles, and the demographics in real estate just go down forever, okay? We're all developed countries are peaking upon. This is the last great generation, the baby boom and the millennials. The demographic cycles just keep going down, and without new, larger generations, you don't even need real estate. You know what the difference in real estate, stocks, and anything else? It lasts forever. You build a house now, it's there 300 years from now. Ask people in Europe. They got a ton of 400-year-old house. The good thing about a 30-year mortgage, you can lock it in before it gets too hard to get a mortgage. Because the rates will come down, but a lot of people won't be able to qualify if the economy gets as ugly as I'm seeing for the next few years. First of all, this tightening, it takes a year and a half to hit. So it was from early 2022 into July of 23 so far.
Yeah.
And they may still do a little more. We're gonna feel that the most in the second half of 24, early 25.
Oh, the real pain is coming.
So that's when we see, are we really going, and when they say soft landing, I'm like, not a chance in hell, okay? If we're going to see we're going to see it by the second half of this year, and then it'll take early 2025 before we realize how deep it is. I think it's going to be deeper than 2008 and 9.